Hi guys, welcome back to the channel. My name is Dave, and today I want to talk about AGGH from Simplify ETFs. Now, this is the same group that has brought us creative funds like SVOL and HEQT that can enhance our yield, and that's the same thing we're trying to do here with an aggregate bond ETF by bolting on some bells and whistles. We're going to enhance that yield from maybe that 4, 5, 6%. Maybe we're going to reach for that 10 or 11%. In the case of AGGH. So let's take a look at this fund and see if it makes sense for our portfolio. If that is what you're looking for, please stick around. Whoop. So I would start off by saying Simplify has some interesting funds. They have some creative products, and this is one of them. We've talked about a few in the past. Those include SVOL and HEQT, and I'll link those videos above if you're interested in watching those. Also, if you are an owner of SVOL, you already own some AGGH. Since this ETF has now been added to SVOL recently at around a 20% of that fund. Now, both SVOL and AGGH are managed by Shailesh Gupta, who I recently had the opportunity to speak with about AGGH, and he certainly knows his products, and he currently owns AGGH, which is always good to see. I would hate to see Elon Musk tell me I would never buy a Tesla. Just same thing here. I like managers that get behind their product and they want to own it as well. Good sign for us. But AGGH is an aggregate bond ETF, but it also has some bells and whistles added to enhance that yield. So if you're somebody looking to add additional yield within your fixed income holdings, this might be an option for you to do just that. If you're a 60-40 guy or person, and that 40% of your fixed income or your bond portfolio, you want to add some AGGH, this might be something here where you can enhance your yield. So what is this? Well, we got the Simplify Aggregate Bond ETF trading at $20.24. The Simplify Aggregate Bond ETF seeks to maximize total return. Well, that's great. We appreciate that. The fund has actively managed to create a core bond exposure with enhanced yield via structural income opportunities such as more efficient curve positioning and defined risk option writing. Like I said, they have lots of interesting funds, and there's a lot to unpack there, and we will do that when we get down to the holdings. AGGH can be used by investors who not only seek higher yields than investment grade bonds normally provide, but a higher total return as well. So read that for what it is. Now, I think Simplify does maybe a better job than anybody else as far as getting info out to potential investors, right? So go watch this video. Enjoy Ranja. And who wouldn't want to watch Ranja talk about AGGH? Looks very exciting, right? So they give a very good explanation, and that's worth watching if you're considering this as a position in your portfolio. Fund overview. Inception date, 2/14 of 22. So we're coming up on a 2-year time frame here. Net expense ratio, 0.33%. Not too bad. Let's see. It's about 100 and what are we at? Total assets, $141 million now, so it's grown nicely. It pays out every single month, yielding around 8 to 10%. And again, we'll take a closer look at that. Management fees, as I said, about 0.33%. And then we scroll down and we're going to get into these portfolio holdings. And then again, this is where we're going to get stuck for a little while, talking about all these different positions and how they function within this portfolio. So what is in this currently? Well, at the top here, we have Treasury Inflation Index Notes, which is a large part of the portfolio, along with AGG, which is the iShares Core US Aggregate Bond ETF. And this ETF alone has over 10,000 different bonds, so very diverse. We also have LQD, which is the iShares iBoxx Investment Grade Corporate Bond ETF. Then we have a TIPS product here, an LTPZ, and then we have a MBS product here. An MBB, that's mortgage-backed securities from iShares. So we have lots and lots of bonds. There's lots of bonds in this. And of course, that is the core of this fixed income fund. However, we also have several other positions here that help manage this fund and create the additional income that we are looking for. So down here, we start with some sold futures on the S&P 500 and some purchased bond futures. They have sold futures options as well, all the stuff that you see here. And again, we'll come back to this. Finally, we have some sold options down here at the bottom, both puts and calls on some of the core bond holdings, all those that you see down here. So the bond positions are fairly easy to understand, right? We got that part. But let's go back up here a little bit. This is a bond fund after all, but the goal here is to buy bonds with the highest risk-adjusted yield, and that's exactly how it's stated in the video. Again, I recommend you watch that if you're interested in this to get some more information. But what about the rest of these positions? Well, let's start with a short position on the S&P futures. This was described as both a credit hedge as well as a way to reduce the volatility of the fund. Then we have the Treasury futures, and they're here to help achieve the target duration of the benchmark. Okay, so since the fund holds a large position in short duration tips at the very top of this list, the Treasury futures help to keep the duration close to the benchmark. Then the sold options on futures that you see here would function similarly to selling a put or call on TLT to hedge and add income to the portfolio. So the reason to do this with futures is because transaction costs are lower and they tend to offer higher yield with lower risk. And finally, again, let's move down to the bottom. Down here at the bottom, you see sold puts and calls against the core bond holdings, just like you might see with a standard covered call strategy. The cool aspect with these positions is that the manager has the freedom to sell both puts and calls. So you're comfortable with that idea? I personally like this, versus TLTW, the buy right TLT version that a lot of people bring up. For example, that only sells calls. And I know I've talked to a few people since posting my video on TLT, and I'll link that video up above, that I prefer to manage that position myself. And to back that up, all you have to do is look at the performance of TLT versus TLTW over the last year. If they had flexibility to sell puts versus calls at certain periods, I think it would be a much improved fund. For instance, over the last few months, being on the put side with TLT would have had superior results, and I do not think that is market timing in this instance. So if you are a fan of TLTW, think of this as a smarter version of TLTW with shorter duration exposure. That's how I'm thinking about it. And you can see that as well in this chart. This is the total return of TLT, TLTW, and AGGH over the last year. So much low response to rising rates over the past year with AGGH, shorter duration, and the best overall return of the three, AGGH. And this is the straight price return for the three as well. Again, just to show the minimal drawdown over the last year versus TLT. And we can jump over to Seeking Alpha as well and take a look at AGGH. And I am a Seeking Alpha affiliate. It's one of the tools that I like to use. They are offering another special. Seems like they've had a lot of those recently. I think this one's 30% off, starts tomorrow, runs through the first week of December. So again, I'll link that down below if you're interested in this tool. Again, it's one where I get a lot of my information. But AGGH is currently at $21.95. Again, net expense ratio is 0.33%, reasonable, yielding around 9%, 9-10%, about assets under management right now of 140 million. So it's got some decent size to it now. You can see it's been pretty flat for the year. In a year where long duration bonds like TLT, bond ETFs, I should say, have given up quite a bit. AGGH here is down just slightly. It started out at 22.50 or so, and now it's about 22. So giving up 50% or 50 cents, but it's returned about 9%. So overall, not too bad. And you can kind of see that outperformance too. If we compare it to AGG, just an aggregate bond portfolio, again, or ETF, has about 10,000 different bonds in it. Similar duration likely. I could check that out. And then BND, another one too, the total bond ETF there. These two very similar. You can see the performance between BND in purple, AGG in blue, 3.8% total return, including all those distributions, and 4.05%. So very close. But AGGH, 8.67. So in this case, who knows what's going to happen in the future, but based on the last year, some of those enhancements really paid off to the tune of an extra 4.5%, depending on which one you're comparing it to. So you can see how it could function in your portfolio and give you that additional yield you might be looking for. So what do you think about AGGH from Simplify ETF? Could this be a substitute for part of your 60-40 equity to bond portfolio? Part of that 40%, could you put it into something like AGGH, this aggregate bond ETF? For me, it's a yes. I would certainly do that. I would take part of that 40% and I would stick some AGGH in there. Not all of it, but to enhance the yield a little bit, diversify a little bit into something like this, I would be okay taking on that additional risk that you have by diversifying into something like this. And I don't think it's that big of a risk. So, yeah, but that's my view on this fund. So you have to decide for yourself what is best for you and your portfolio. But for me, I think I'll be adding some shares of AGGH. Now, if you have any questions on this, please ask down below. And 2023, great year, right? Hopefully you were invested and you made some money. I know I had a lot in cash, but I did all right. Sold a lot of options, made a lot of income, had a lot of fun, and we're going to continue that in 2024. So if you like this type of thing, like and subscribe. And we'll see you next year. Have a great night. Whoop.